This is another episode of me documenting the day-to-day process that I'm taking to achieve long-term consistency in the financial market, and we have more drawdown. But it's frustrating because I am consistently framing a really solid trade plan where the market literally gives me exactly what I'm looking for. But somehow, some way, one way or another, I am just not able to execute on that idea. So, no monologue, no yapping. Let's get right into it because this is pretty frustrating. So the net P&L today down $144.96, which is basically nothing. I mean, you can see that I'm starting to respect the risk after the lesson that I learned on Friday. And I'm starting to follow my rules again, which is good. I took a step in the right direction, but I should have been able to capitalize on this move because it gave me exactly what I was looking for, but somehow, some way, still was not able to execute on it. And we'll get into it. But what playbook am I executing? I'm looking for my protraction sell playbook because the higher time frame narrative is we're still high up in the range of the impulse swing started on Friday and continuing on Monday. So what I mean by that is, first, let's start on the daily. Check out the daily, what we've been doing on the daily time frame, okay? This was Friday. Y'all know we had that really large update on Friday. And then what do we see on Monday? Opens, trades down a bit, and then we have continuation of the impulse swing created on Friday. But if we look on the lower time frame, we really do not see any kind of short-term discount or rebalance of the impulse swing created. Monday is just simply a continuation of that. And then if we look at the next part, the higher time frame narrative that I've established, we've now found consolidation, but the order flow inside of the consolidation hints at lower prices. So what do I mean by that? Well, if we look at the 4 hour right here, we have a change in the state of delivery, because this up close candle was violated by this down close candle, right? So this is a bearish order block. Now, in order for the order flow to flip back bullish, we need to see these down candles violated. And the market never does that. Never violates a down candle. We do violate the open price here and here, but we never see a solid up close candle that just violates and overtakes the down close candle. So I see the market is still respecting the bearish order block that we have right here. And then if we look at the lower time frame on the hourly, that's even more apparent what's going on, and the order flow is still bearish. You can see the 4 hour order block on the 1 hour time frame. You can refine it down to this range right here. You can see that the market's still respecting that, and the market is just failing to find ground inside of this imbalance right here, right? So we've tested it here. We produced a reaction off of that, but it's failing to sustain any kind of movement off of that, and the order flow is still bearish. If we look what happened in the overnight session today, we see the same thing that we kind of see on the 4 hour, right? We have this bearish order block. Market trades up into that, and that produces another large down close candle that creates what? Another bearish order block. Now, I'm just now seeing this, just now noting this, but this is a propulsion block on the hourly time frame because we have an order block that is formed off of the order block. And so does this act as a propulsion block, which means it should send price lower like this? Does it? Well, you tell me. Look at the move that we had, rejecting the propulsion block. Okay, so that's what I mean by the order flow being bearish inside of that consolidation range, hinting at lower prices. Because I'm looking at this order flow, and although we are in a consolidation, and although we had a large up close candle on Monday, I'm zooming out, looking at the macro perspective. We have not rebalanced this range yet. So if the market wants to take out the all-time high and draw back up there, which it can, absolutely, is it going to? I don't know, not with certainty. But I think we should at least rebalance this range first. And in this consolidation, the order flow is telling me that we are not likely to just trade up right up into that because I have no indication that the market is bullish at this point in time. So that's what leads me to believe the move on Monday could be fake, and we could see a breach of Monday's low that really rebalances the range before we pick a new all-time high. So you can see that this is quite literally what happened, right? I'm looking at the order flow inside of the consolidation range that hints at lower prices, and the move on Monday could be fake. Was the move on Monday fake? Yes, because we traded up. We saw a continuation of the move on Friday, but the market drops down. Now we have completely overlapped the Monday's range, and this was manipulation. So market criteria, looking at the all-time highs in the overnight session, or looking at all the highs in the overnight session, there is some measure of a stop hunt at them, followed by displacement lower. So now if we drop down to the 15-minute, what I was also seeing on the lower time frame order flow is also very bearish. If we look at the highs above here, we can see that they're establishing a pool of buy-side liquidity, but if we look at the highs, we can see this high was breached here. This high was reached here. This high was reached here. So you have a buy-side liquidity right here. And then we do that again in the overnight session as well, right? We have this high here, relatively equal. And again, another buy-side liquidity raid in the overnight session, and this produces aggressive bearish order flow Now we have violated this bullish fair value gap and this bullish fair value gap. Strong down candles. Strong down candle. Strong down candle. This becomes inverse. Buy side liquidity raid. I'm not thinking we're bearish looking inside of this consolidation range, or I'm not thinking we're bullish looking inside the consolidation range. We're creating buy side above, but the highs formed are violent. That's what I mean by that. We're taking buy side and we're having these violent, aggressive drops lower, and the order flow remains bearish. So this tells me we could drop down today, but leave that buy side above for a later point in time. I'm looking at the 4 hour and the 1 hour. See respect to bearish order flow, and that has not changed. I don't think it has a reason to rebalance, or I don't think it has a reason to change until it rebalances the range. So what I'm basically mentioning is I don't think we have a reason for higher prices unless the market rebalances the range. Then we'll probably start to see some bullish order flow sub to the marketplace and then potentially climb for a new all-time high. So trade plan, and this is literally what happened. Literally what happened. So why am I not able to execute on it? I want to see a price can reject the new day opening gap, respecting its quadrants, failing to close it, indicating a sign of weakness for me to target PDL and levels inside the new daily BISI above. So I bet the majority of traders who trade ICT concepts today were bullish, thinking, oh, we're going for a new all-time high because we formed a new bullish fair value gap. And now I'm going to look for the market to drop below Tuesday daily low, trade into the gap, and then trade higher for new all-time high. That's probably what most traders were looking for today if you trade ICT concepts. But I'm looking at the move on Monday, and I'm thinking that's fake. And I'm looking at the consolidation range, dissecting what's going on within that, and I'm thinking this is not bullish at all. So I want to see a price can reject the new day opening gap, respecting its quadrants, failing to close it, indicating signs of weakness for me to target previous daily low and levels inside the new daily BISI above. My objectives, my targets, even if we are bullish on the day, I can be short selling, targeting the daily BISI. That price we want to draw into and use that to climb higher, even if I'm incorrect about the market being bearish or being bullish, right? Or yeah, incorrect about the market being bearish. We can still trade down into the BISI and then trade higher. So that's still an area for me to target on the sell side. So the low-hanging fruit is previous daily low. And if this gets really aggressive, Monday low is in sight. Did we deliver Monday low? Yes, we did. But I'm not able to capitalize on that. We'll get into that. So now I just have the annotations basically explaining everything I was looking for. Based on the order flow, I'm thinking the price wants to drop, rebalance the impulse swing made starting last Friday. Carrying it down to the 4 hour. Price failing to sustain a reaction off this gap, looking for drop down on the daily BISI. It may want to lay a body over this gap. So we have this volume imbalance here. So typically when we have these volume imbalances, price will want to come back and lay a body over that gap between those candles. Bearish order flow still being respected. Looking at the highs above, there's damage done at them. This is hinting at potential drop down into the daily BISI. C runs on buy side followed by aggressive down candles. This tells me we could potentially break lower, leave this buy side intact once price has rebalanced to a discount. So now let's pull up the recording and see what happened with the execution. So you know that in my plan, I'm not bearish or I'm not bullish. I'm bearish and I'm looking for lower prices and I'm looking for price to reject the new day opening gap. So what happens? Why was I not able to execute on that? Okay. First things first, going into the open, pull up the chart. Let's go to 5 minute. What I'm looking at going into the open, because we already have respect of, if we look at the 50 minute, so I was looking at going into the open, we can see that now we're trading up into the new day opening gap. But the 9 o'clock candle has traded above consequent encouragement. But where does it close? Where did the bodies stop? Where do the bodies stop? They stop below the midpoint. That is an indication of weakness. No indicator needed. This is your indicator. Where do the bodies close? Around PD arrays. The following candle does the same thing at 9:15. So on the 5 minute, I'm looking at the suspension block here. And I'm thinking, okay, if the 925 candle can be a large down close candle that suddenly closes outside of the range of the 5 minute suspension block, makes that inversion fair value gap, then I'm definitely going to be looking for it to be a seller right at 930. But it didn't do that. Never did that. If it did that, that would have been the most ideal case scenario. I was thinking about trading pre-market, but I did not because I have a rule that says I cannot. And I've learned my lesson from the previous video, if you watch that I cannot violate my rules, because if you violate your rules one time, and it works, and you make money violating your rules, you have now conditioned yourself that it is completely okay to break your rules and just do it again in the future because it worked last time and you made money on it. Now, your behavior begins to fall apart, your system's going to fall apart because now you've conditioned yourself that it's okay to break your rules. So that's basically what I'm going through right now. Condition myself to break my rules, and that's how I ended up passing the top step eval. Now I have to fix my behavior and become disciplined again as I once was. All that can literally fall apart if you slip up once and you violate your rules one time and it works. I promise you, your systems will start to fall apart and you will start to collapse because I'm going through that right now. Now I'm starting to work my way back through that. Obviously, I'm starting to follow my rules, be more disciplined, and I'm getting better. The first trade that I took was 9:30, large down candle, large open obvious gap. Now we have clearly left the 5-minute suspension block, so I can get rid of that. And my first sell is going to be right here. Now typically, when the market breaks lower at 9:30 and we have a really, really large gap like this, it's going to leave that open and it's just going to keep dropping. So that's what I was looking for, because I'm already looking for the sell. Price has rejected the new day opening gap. It's shown me willingness to leave it. So I take that as a sell. No problem. Easy. But this ends up coming back on me, never delivering the first parts that I was looking for. I was looking for quadrant levels inside of that daily gap like I mentioned in my plan, right? Go back to the plan. Be a short seller targeting the daily BISI that price will withdraw into, used to climb higher. This actually ends up coming back on me. I moved my stop loss because at this point in time, I thought that the trade might need a little bit more room to work. But this was a really bad move because at this point in time, the trade was obviously dead. I mean, look how strong the market is here. We don't even drop down into that bullish fair value gap, which is insanely bullish. If the market can't even drop back down into a bullish fair value gap, that is insanely bullish, and you can bet your ass that we're going to go higher. So I ended up moving my stop here, thinking the trade needs more room to work, and I lost $115 on that position. Now the second trade, okay? At this point in time, I'm thinking, damn, this looks pretty bullish. We took previous daily low. This is the move that probably faked out a lot of you guys and probably had a lot of you guys thinking, oh, we're going higher. Meanwhile, I'm seeing this. Initially, I'm thinking, okay, because at that point in time, what do we see in the market? We dropped down into the daily gap here. We drop below previous daily low. Go to a 5-minute. This is what we see. We took previous daily low there. We dropped into the new daily bullish fair value gap. Had this really, really strong reaction. This probably has a lot of people thinking on a run below previous daily low, oh, we've definitely put in a low and we're definitely going higher. We're going to start reaching for the all-time high again. So they do this fake move. Now, admittedly, this had me thinking to be bullish, and I was very close to switching my bias intraday and very close to actually buying this fair value gap right here. But I can't, and I don't. Why? Because I have a rule that states never switch bias intraday. And if I switch my bias intraday and I buy the market and it works and I make money on that, what happens as a result? Now I have trained myself and conditioned myself that it is okay to switch my bias intraday because it's worked in the past, because I made money off of it. Now I'm going to struggle to follow that rule on all my following sessions, and then it's going to start affecting my behavior. Now I'm going to have a problem holding conviction in my bias and one trade idea and just sticking to that, just one side of the market, which is what I've known how I trade the best through many, many sessions, because I used to struggle with indecision. I used to come to the market and not know if we're going higher or lower today. I couldn't decide, so I'd be bullish and bearish, and then I couldn't execute on any idea intraday because I look at a long setup that's there and think, you know what? I see this long setup in price, but we could probably go lower. If you're not confident in what the market's reaching for and where we're going, where price is going next, then I promise you it's going to be 10 times harder to execute. Like, you have to have an objective in mind. You have to have a draw on liquidity. You should only be looking at one side of the marketplace. I'm only looking for lower prices today. And because I have that rule that states I cannot switch my bias intraday, and because I know what happens if I break my rules and I make money on it, it completely makes my systems fall apart, and I start doing things that I know I should not be doing, and I experience large losing days. As a result, I can't. I absolutely cannot. I don't care if I'm actually wrong on the day and the market keeps going higher. I cannot switch my bias intraday because I know what that will lead to if I take that trade and I make money on it. Then I'm just going to consistently repeat that bad habit, and then I'm going to struggle holding on to conviction of my trades in the future. So I can't. So I don't. Then, what do you know? 4 minutes later, up close candle, buy side taken. Now at this point in time, I'm thinking anybody who sold short the drop down at 9:30, they've been erased. You have to be thinking in terms of who's in pain and who is in gain. Well, initially, short sellers were in gain. But then they turned their smile, flipped it upside down, put all of them in pain. 9:30 traders knocked out. Anybody who sold the drop in at 9:30 stopped out. So they clean the slate, remove the buy stops. Then what do we see? The market attempts to leave the new day opening gap that I have mentioned in my pre-market plan, but it fails to leave it. Following candle, boom, change in the state of delivery. I don't even think I put risk on. So let's watch this in real time, right? Watch as the market has opened on this candle here, and it attempts to leave the new day opening gap, but where does that candle close? Where does that candle close? We'll watch the development of this 1 minute candle. So see how initially this is a bold face up close candle, but where does it close? It struggles. It cannot leave the new day opening gap after we have taken buy side, after we had a drop down, after 9:30 traders are knocked out. Now everybody's thinking we're bullish. Look at this really, really strong impulse swing that we had higher. Everybody thinks we're bullish now. Everybody thinks we're going to go for the all-time high. I'm not thinking that. I'm not bullish today, and I'm not switching my bias intraday because I know what that's going to lead to. So I'm holding conviction on my sell idea, and then look how the following candle opens, and boom, immediately trades down. You can see I'm starting to get interest in this. Moving the chart around a bit. We'll watch this in real time. It's extremely important that you record your sessions. I'm noting the range of that candle. I don't even fucking think. Guys, I don't even think. When I see what I see, I'm taking that shit. Still trading 2 contracts because I'm in hella drawdown. A lot of fucking drawdown. Got to wake our way out of it. I don't even think. I don't even think stop loss goes at the high of the order block, according to my stop placement principles that I'm working on right now. And I'm in, okay? So you might be thinking, bro, you literally sold the high day. How did you not make money today? And it's kind of been the theme of my trading recently. Literally picking the high and the lows, but still somehow not being able to make money. Extremely frustrating. I mean, look at this move. Monday daily low. As you know, in my plan, I was looking for Monday daily low, right? Looking for price to reject the new day opening gap for Monday daily low. Give me exactly what I'm looking for. Execute on it. Change the state delivery. This is an extremely high probability order block because it is laid across the consequent encroachment of the new day opening gap. So think of it like the crosshairs of a sniper rifle, right? Here we have the consequent encroachment, the new day opening gap. And then we have the PD array, the order block laid on top of that. Think about it, crosshairs of a sniper rifle. Boom, there you go. Now you're looking through your scope, you've got your target. Boom, execute. Right there, like that. So this is how I'm trying to get myself to think about high probability PD arrays, because this is what ICT taught in one of his most recent lectures. High probability PD arrays. What PD arrays do you select? Which are the ones that work? It's the ones that are laid over top of quadrants. It's the same thing for every PD array. This is a high probability bearish order block because it's laid over the consequent encroachment, the new day opening gap. You can see how it kind of makes that cross here, right? We have this up candle, and then boom, consequent encroachment. Boom, boom, sell it. Okay, anyways, back to why did I not make money on this trade? Well, we had this really strong impulse swing. I'm thinking my bias could be wrong, but I'm still not switching my bias intraday, and I'm still giving it another shot. First 5-minute candle closes, and I mean, put yourself in my position. How do you do replay on this? What the fuck? Okay, let's go here. Okay, so this point in time, you know, when I take these trades on the 1 minute, when I'm timing these highs and these lows, initially the trade may look pretty scary. It may not look like it's going to work out because this is what it looks like at that point in time. Although we completely overlapped this 5-minute candle and we have the change in the state of delivery because we violated the up close candle's open price, right? it is not giving me the confirmation that I need initially, because it kind of just sits around there, kind of just hangs up there, doesn't really show me premium sensitivity. Like, I want to see it move away like this. Like, I don't want to see it hanging around there. I don't want to see it sit there and spend time there. That's not what I'm looking for. I'm looking for an immediate response and immediate displacement lower. And the fact that I kind of just hung around here, and then I had first presentation, the quadrants of that annotated from earlier, and I'm looking at the market react to that, well, this is a bold-faced up-close candle. I paused at the perfect moment, and I need to see if the market is respecting the mean threshold of the order block, because if it violates that, then I know it's not a bearish order block, and the market's probably going to make a higher high, and I'm incorrect about this trade, and I'm probably going to walk away with a second loss. So let me delete this real quick. Let's look at the midpoint of the order block, okay? For the order block to remain valid, what we want to see is the market respect the midpoint of that. And does it? Well, the body's closed below it, right? But at this point in time, this is what it looks like. So I'm thinking, I need to wait for this candle to close so I can see if it's respecting the mean threshold or not. But I don't. And as it is an up close candle, I literally pause this on the correct frame, like the exact frame where I flatten the position. But this is what it looks like in that moment, right? It looks pretty damn scary, right? But this is what the market's going to do. It's going to put you in max pain before you receive any kind of gain. But where does that candle actually end up closing? Below mean threshold. Then the following goes down. We have inversion fair value gap, balanced price range, respects it, drops. I literally sold, let's look at the executions on Top Step. Not that, this, there we go. So this is what I mean by, like, somehow, some way, I'm just not able to capitalize on these fucking moves, and it's getting frustrating. So this is the next thing that I'm going to study and work on after I complete what I'm working on right now. Then I'll move on to that. So 25,27850. What's the high of this candle? High of this candle is 25,28100. So I basically sold right up. Can't see that. 7850, right? So I sold or bought back right here as it was a bold-faced up-close candle, thinking that it was going to violate the order block. And then, you know the rest. So, that's the session for me. Go back and review the daily review. What did I learn? Remain confident. Try it again. Strong rally made price seem like my idea wasn't going to play out. I thought about flipping bias intraday, but remained confident in my sell idea and execute on it for a second time when present. The issue is I was not confident in the position. I got scared out of the position. So when is it valid for me to flatten a position? Before my stop is realized? Because I took off early, right? My stop loss never got hit. I exited the position early. Well, if I'm trading an order block, I know that if I'm trading an order block, I need to wait for that candle to close to see if the mean threshold of that candle has a body laid over it. Because it can do what it did to me today, where it looks like it's going to violate the mean threshold, but the body where it closed tells you that this is still bearish and it's still going lower. I'm selling the high day and I don't make money. What is going on? So, that's basically about it for this session. Although I did do a lot of things right. Took a huge step in the right direction, preventing myself from breaking my rules that would have costed me, because broke rules on Thursday led to my largest losing day on Friday. I've not been respecting the risk of this more volatile condition. And that's where we're at by Wednesday. So I should have had a green day yesterday. I should have had a green day today. Yesterday, I just refused to take anything off, and I demanded that the market give me exactly what I was looking for. It came back on me, stopped me out for break even. Today, I take the trade off before it plays out in my favor. So I'm correct about bias yesterday and today, but walk away down $169. Okay, that's what's frustrating me. I'm consistently framing the right ideas, the right trade plans, the right targets, just not executing on those ideas one way or another. It's just either I do this or I do this, or like there's so many just little mistakes that I'm not able to walk away up from these trading sessions. The good news is that I know that I have a system that works and it consistently repeats, and I'm really, really good at reading this market. It's my pet market. I'm a specialist in the NASDAQ. That's it. I don't care about anything else, and I'm really good at framing these trade ideas. And I know that eventually I will get better over time and work these problems out over time, and I'll be able to catch these moves consistently. Like, I'm only going to get better from here. And that's the good thing, because I only have been getting better. It's just little shit like this that's just messing me up, and it's annoying. But I will work out of it. So that's going to be it for this one. Talk to you guys tomorrow.